Hello and welcome to the look ahead for Thursday, the 4th of July with me, Fiona Singh-Cotter. Actually, this is a fairly special edition as tomorrow the main focus here in the UK is going to be on the general election. Now, Labour are widely expected to win a comfortable majority. They've remained around 20 points ahead in the polls. Now, the big question is, what does that mean for the pound and other UK assets? So I think, first of all, just thinking about what a Labour win means as far as the fiscal position of the UK is concerned. If we have a look at the manifesto, as far as spending is concerned, it's relatively modest, looking at around £9 billion in spending, and that's to be matched by around £9 billion in increased revenue from taxes. But if we think about that in context of the £3 trillion UK economy, that's really quite modest. And so with that in mind, it's not actually expected to have a sort of dramatic impact as far as the sort of fiscal position of the UK is concerned. And what that's really important for is actually the Bank of England, because the Bank of England are going to be sort of looking at what Labour are planning to do and what they do and thinking, does this impact our outlook for interest rates and the outlook for growth and inflation? And, Labour or any other party for that matter, but because we think Labour are likely to win, we talk about that. And I mean, to be honest, we'll know more about it in autumn when Labour will have their autumn budget. So until then, I think, the Bank of England will be looking at this thinking, well, there's not too much for them to sink their teeth into, for them to get concerned about, which means that we could potentially expect the Bank of England to continue for the time being with expectations of rate cuts later in the year. Now, what does this mean as far as growth is concerned? Growth in the UK is really anemic. We might find that we get a little bit of, growth from this increased sense of stability and certainty that the Labour government will bring. But I don't think, from the manifesto, there is anything there that's really suggesting that's going to bring strong growth to the UK. Obviously, as we've seen previously, there are also external factors which could boost growth just as much as it could make growth slow down further. So what does this mean as far as assets are concerned and as far as the pound is concerned? So, I mean, this is the pound chart that we'll be looking at here. But I think broadly speaking, it's not really a massive domestic event. As I said, because we're not really expecting for there to be any major changes as far as fiscal position is concerned, at least what we know now until that autumn budget, then that does mean that the pound will really continue to be driven by Bank of England expectations. And the market at the moment is expecting the Bank of England to cut interest rates potentially as soon as August, as we've seen inflation has pulled back to that 2% target, although service sector inflation remains sticky at 6%, and wage growth also remains strong around that 6% level. So we're looking at the chart here. That big move up actually that we've seen in the pound today is much more to do with US dollar weakness and the idea that actually the Federal Reserve could be moving closer to cutting interest rates after we heard about I heard from Federal Reserve Chair Jerome Powell yesterday, who sounded more dovish than he has done. And then that was then supported by signs of weakness or starting softening of the US labor market, with continuing jobless claims rising for a 9th straight week. Now, they're at a level that we haven't seen that level of rising jobless claims since 2018. They're now at 1.86 million, which is the level we've not seen since 2021 November. So, we're seeing some weakening there ahead of the US non-farm payroll report on Friday. Just obviously remember, tomorrow is Independence Day in the US, so it's a holiday, so we might see low liquidity, which could mean that moves are spiked. But as I said, as far as the pound's concerned, we could see a little bit of a rise, could find that it's supported thanks to that increase in stability. But I think sort of if we look at this more as a global movement, given what's going on in the rest of the world politically, France, potentially in the US, this sort of centrist left government that we're going to be getting, most likely going to be getting in the UK, could actually be quite stable compared to other countries, which could be beneficial for the UK, globally speaking. So let's just have a look. As far as I was saying, as far as levels to be watching here, on the upside, you've got 128, which is the level to be looking for on the upside. You've got this bullish engulfing candle, which combined with the RSI above 50, does suggest that we could be looking for that level. If we get a rise above that, the next one to be watching will be the 28, almost 29, which is the 2024 high. On the downside, just watch out for the 127 level. As I said, we talked about sort of the position of the UK globally. Now, this is the FTSE that we're just looking at here. Obviously, we've got that slightly stronger US pound, which has just put a little bit of pressure on the pound on the FTSE recently. But you know, as I said, if we do get sort of this idea of stability in the UK, that could help boost investment in the UK. Could be a positive as far as the FTSE is concerned, although these are much more international stocks. So maybe the FTSE 250 would be an area to be looking in. But yeah, so we could see a rise here. On the downside, levels to be watching out for 8100. Obviously, if we see a very strong pound, that can be negative for the FTSE. If we get a break below 8100, then look towards that 8,000 level. On the upside, June highs in there at 83.50. That's the level to watch on the upside. Before they might get a little bit of resistance around the 83 level, which was the late June high. So I hope you like what you have seen. And if you have, then please do give this video a like. And if you'd like to receive more videos like this, then please do subscribe.